Get moving. It is 4/13, May 12th, May 12th. Let's write down this date. This might be an important date in the overall short-term active picture, but we shall see. Anyway, I'm going to give everyone 2 minutes to, not even 2 minutes, 30 seconds to read the disclosure. I'm doing a Red Dog recap. I feel like it's an important day to do so. I know a lot of people have been tuning into my 6:30 meeting, so I want to collect the dots and just show you, the adjustments that are made so you see it the day before, not the day after. I tried to give you guys clues on how to adjust and what to look for, what we've been doing each day. So now that it's listed, I'm going to let you guys take a look. So here we are. My name is Scott Redler, Chief Strategic Officer at T3Live.com. I welcome you to my recap. This is the recap that I usually do each day for Redler All Access, but I feel like I wanted to make it public. Every morning I do a morning call and a recap, and I've been also doing a 6:30 video to try and give everyone some of my quick thoughts, not my extensive thoughts. And today we talked about this tight range. What's going to be next? Do we hold 2,900 and break above 2,954, or do we fail at 2,900 and do finally, after the weeks of everybody saying the market shouldn't be here, maybe the market tells you, hey, it's time to take some risk off and have a little bit of low gross, low net. So real quickly, for compliance terms, I got to put the VTF up. So this is what I've been showing you guys each day. Long is what I'm in. I could have been in them for days. I could have been in them for hours or for weeks. And then shorts are, what I'm short. I'm short a bunch of premium. I added a lot of premium today short to get synthetically short. Besides being short, I came in short the Qs and I covered towards the end of the day at 347. I said, you know what? I'm out of that, but I'm going to keep my spiders short. As you can see, I was in a lot more longs and I got rid of a lot of them. Okay, this was my day that I adjusted. This was my day that I said, okay, I've been in lots of longs, a bunch of shorts, and trying to ride this trend, let the market prove that it can continue to go higher. And then today, it kind of felt a little odd prior, so I'm glad, for the first time in like 2 weeks, besides having a spider short and selling some SPY premium, I was actually earlier on in the day, at 11:41, I sold some 231 calls in the SPYs to get more short. I also sold these later as things rolled over, besides selling actually even more SPY calls to get more synthetically short. So today was probably the most short I've been in a while, and I wound up basically covering a lot of positions because the markets told me to. I also was short some puts to be synthetically long, and I said, hey, you know what? Today's a day to take notice. If we come in hard, I don't want to be put the stock. I'm going to cover for little losses, so this way I could be more flexible. And I do have some leftover longs. I have work from 27, 28 Twitters from last week, so I do have a few leftover plays, which on day one down I get out of a lot. Obviously, I cleaned up 1, 2, 3, 4, 5, all the way down. So anyway, that's that. So I want to get into the charts to show you why, but I have to show you this for compliance, and these are all my friends talking. So look at the chart of the SPYs, guys. Okay, ever since this active sequence that started here, we've held every single test of this active sequence to the upside. We've had a few spots where I'm like, okay, let me reduce a little bit, let the market tell me that it could prove that we should stay involved long, stay involved with risk. Okay, so basically, this was your first move. If you remember this little minor red dog reversal right there, that got us out of a lot of longs and shorts. But what happened here? We had a down move, 3 inside days, and then this resumed. Okay, every single step along the way into new highs, I've been selling premium besides also being long because that's what made sense. So anyway, coming in today, this was the main thought. Okay, can we hold? First thought for the week on Monday was, okay, can we reclaim 2,900 to keep the active bulls in somewhat control? And they did that yesterday. While they did that, tech became overbought. The weaker sectors stayed weak, like the banks and the cruise lines and the casinos and energy and a bunch of other friggin' small caps, all weaker sectors. So anyway, coming in here, I'm like, what's going to happen here? We're going to get above 29.44 and take out 29.54 and see resistance 1 or the next resistance. That was one scenario. The other scenario was no, we get a little bit weaker. Okay, which we start to see unfold throughout the course of the day, and then you had this small little push through failure, which is a red dog reversal sell. You break above a level, come back below it. Usually that makes a few shorts get squeezed. It kind of gets some people in for FOMO and then reverses it on them. But that really wasn't the spot to say, hey, this is giving me a blaring clue to reduce some risk, but it was really when we broke below, what was this? This was 29.03, broke below 29.02, and that was the spot. So you could have, added to your hedges on that spot, or got out of your longs, or just if you day trade, maybe just got short. Okay, the market felt heavy for the first time in a while. So anyway, today's low is what? Today's low is 28.69. And does this mean we're going to go test the lows? Nobody knows, but what does this mean? It means switch some gears and get a little bit more flexible, be low gross, low net, that this could be a complexion change. So whenever that happens, you want to make sure you're ready for that. So this is now 28.69. So 28.69 is your point of reference. We'll see if we open below that tomorrow, or do we open above it and hold it. I would say for now, you'll hear me say tomorrow, if the sellers have control, they don't let the bulls or the active bulls take back 29.01. Okay, because this is a wide range bar engulfing in nature. It means adjust, clean up loose longs, maybe put some more hedges on, but then the next 2 days or so will tell you, the potency of it. So if tomorrow we open up and all of a sudden we get back above 29.01, all right, it's choppy misdirection. Where did that happen? That happened like right here. If you remember this day, all of a sudden, it was a little bit different. This was probably a day that I reduced a lot of risk, got a little net short, and then it engulfed it. And then that said the market wasn't done going up. So now this is a little bit different. We've been going sideways. The advanced decline lines have been getting very thin with just a few key names, so there's less to hold the market up. But anyway, this bar right here, got me out of, 3/4 of my longs and had me sell a lot more premium to get synthetically short. So anyway, 28.48 is a level, and then you have 27.97. This is your first bar like this in a while. And we'll see what's next. Same thing with the SPYs. Like the SPYs, you didn't have to, have a red dog reversal sell at 294. You could have waited for the rollover at 290. At 290, you still could have made 4 points short. If you go right here, look at the way if you knew your level, which we did talk about in the morning. Okay, here was 290. All right, so this was, resistance the entire day. This was your first break, really. At 290.250, this is when you could have said, hey, I'm going to short some, which I was short the spiders all day. That was a hedge, but I added, I don't think I added right here. I think I added somewhere around here. And then once it broke 290, if you knew your level, okay, got below 290, stayed below, and you could have made another extra $3 or $4 short the SPYs. Or made some extra cash flow on your extra hedge if you have a big portfolio. I'm talking about prop trading right now, professional trading. I'm not talking about your 401k, your 529, your cash account on how to put money to work if we get another big decline. That was in March. We did that already when we were 20% off highs, 25, 30, 32. So that was your way to get in. And I actually told you guys for that one cash account, I got in with an average of 27% off highs, and I sold a little early at 28.50. So we're not even back to where I sold the cash account. Obviously, that's a different story. In the 401k and the 520, I'm doing every single month. I'm going to be doing that, until I'm old and gray, which I'm getting a little old, but I'm not that gray yet, a little gray. And I'm only 47, so I have 10, 15 more years. So if you have a long-term time horizon, do not change your plan. Maybe add when things get crazy. I added 50% on my 529 when we were down 25% off highs, and I also put a chunk in. But anyway, let's go back to here. So this was, this was your first clue where your daily, your range for the day broke this tight little triangle. So you put your shorter term time frame, okay, and you overlay with knowing, okay, what's the major level, 2900, 290. So this was first step down to 290, and first time you get to a level, usually you bounce a little bit. Then it came down again, bounced a little bit, bounced again a little bit, and then finally it broke, stayed below it, and cascaded down. So if you were day trading, that's how you could have made money short the SPYs, and you could have done it with everything else. I actually made some decent money short Apple today. My morning note was like Apple's up 7 days in a row. We caught a great swing trade from 285 to like 307 or wherever it was. And I missed the last part of yesterday, whatever, but we'll get to that too. So anyway, that's that. And now we'll see what happens tomorrow. Okay, that was a great way that as I cleaned up some of my longs, I was making good money short SPY. So I still actually wound up with a really good day with the Dow down 457 points. I had friggin' 12 longs on, and I closed near the highs of my day, on my active account. Not the highs on my swing, but still green. And I lost some in my options. I had to clean up my options account that had a big run. But anyway, and now I could be flexible. If we open up tomorrow, we could fade adverse level. We open down tomorrow, we see if support holds, or we claim today's lows tomorrow. That's how I'm going to be thinking methodically. But anyway, this broke below 289.86. Little red dog reversal there. Took out the inside range. So today showed you the sellers had power for the first time in a while and closed right here. So what does that mean? It means be careful. It means your next level is here, 283.78. Really, your next level is down to 279. So this is just a micro spot. Okay, but this was your adjustment area. Now we see, does this wide range bar mean anything? It might not. So, but again, if it does, you want to be out of the way because that's what we do. We want calculated trades with the right probabilities, and right now the probability is that the sellers took back control, and now we're a little bit more wait and see. And if you look here, there was lots of room. So Apple, okay, so this was my thought process on Apple. Okay. By the way, every day I post about 10 to 17 charts on the private Twitter for Redler All Access. Every now and then I put it in the public Twitter also. My thought was Apple keeps going higher. I gave ways to buy it versus 285, which was right here post earnings, right at the 8th day when it wasn't extended. Next day you could even bought a dip. And so I sold it on this day. All right. After 1, 2, 3, 4, 5, 6, 7 days, I sold Apple. I did exit my long a bit early, which was yesterday. It happens. Well, if you're in, great job. It's extended, so I trim and trail. That doesn't mean it's an easy short. 317.05 is the pivot. Maybe a red dog reversal sell signal could give you a calculated short. Okay, so that's the thought process. That's the morning, if this, then that, if that, then this. So it's, okay, if you're still long, then congratulations, you did better than me. Trim some as a prop trader or as a real-time active trader. If you're looking for a short, instead of rolling it up like a lot of people did here, wait for a signal. It gave a signal, went above 317.05, squeezed some people out, came back below it. So it gave you a short versus the high of the day, and then it rolled down, and then once it went red, it broke. I was short it all the way up until, let's see, right now it's down at a 310. Okay, so that's where it's trading. We'll get into that, but you can see on the VTF, basically with Apple, it shows what I did. So I actually started shorting it pre-market today, which was a little risky, and I wound up staying short all the way to 342 when it was down, $2-3, and for me, I feel like I stole something. I probably should be in some short overnight, but I'm like, you know what? I had a really good day, and I'm not going to push it. I'll stay short some of the indices and some SPYs. So anyway, yes, I do short the market too. Everyone thinks I'm a perma bull. I'm not a perma bull. I'm a perma trader that's prepared, that tries to take advantage of situations as the VTF starts talking still. A lot of guys did pretty well in there also. So anyway, this is still one day. Why was I a little bit, I had FOMO of missing out on that short because look how extended it was from the 8th day. The RSI was through the roof. And anyway, now we'll see what happens tomorrow. This would be a compelling area to maybe see if you could buy it back. But again, look, a strong stock could even pull back to the 8th, and this was so extended from it. So we'll see. All right, let's see Netflix. Netflix, I was long a swing position. Okay, mostly since the red dog reversal down here. Okay, this is Netflix. I was long from this red dog reversal. I traded around it, meaning every time it dipped, I bought a little bit, I sold a little bit, bought a little bit, sold a little bit, but pretty much since here, it was long on the VTF, meaning I was holding it and it gave me no reason to really get out of it. I was selling puts along the way. And then today was the first time it broke below a prior low and really held below it. So for me, I'm like, you know what? I'm just going to get out of the way. Some of the bears say, oh, look, red dog, it's a double top. It looked like it was going to make new highs. The market looked like it could have taken out 29.54. For now, it didn't. So this had to have me saying, okay, it's going to either make new highs and go, or we're going to fail. 29.50, break 2900, and then this is going to be viewed as could be a double top, and we have to wait and see. So anyway, I got out of it when it broke below this. I didn't get out of it perfect. I sold some strength, but I really lost on it intraday. And then what I also did is I've been selling puts every single week on the way up and collecting a lot of premium. And then today I said, you know what? If this is the start of a down move, I don't want to be long this, where I don't want to be short puts just in case they put it to me. I want it to be in it if the complexion stayed special. Today, maybe it didn't. So even on here, I know how to take a small loss, which was a small loss. I bought back the 425 puts to be safe, be flexible, and I bought back the 430 puts. 430 puts, I broke even. 425s, I lost a few bucks, and I don't care. That's fine. But again, I'm not stubborn saying, hey, I'm going to be right. Netflix has all the subs and the people are staying home and the virus is going to come back. I'm like, no. Today, Netflix changed a little bit at a potent day below, a prior day low. I could let it do price discovery and figure out what's next moving forward. And we shall see. Twitter, I have a leftover long. It's not even that special. I bought it here. I sold most into it. I have a little left over. Just, if you just sort of like, why are you in that? Work also, I bought it here, added on this day. Sold some decently into strength. Even today, I told you guys I sold over 32. Over 32, I sold more, got smaller, and I also created a call spread. In here, I bought the $30 calls for 55 cents. Sold some at $1.20, sold some at $2, created a call spread by selling some 33s. Today I sold some 32, so now I'll sit and see how that works out. But anyway, we'll see how that goes. As long as this holds here, I'll stay in it. Some guys like, hey, Red Dog, what about space? You said maybe it can go to 24.25. I said, yeah, maybe you can get there. That was a resistance area. First thing I had to do was get above 21. And where would we buy it? We bought it at 18. We added at 19. And then I did tweet when it was in the 20s. I'm like, if you use a tier system and you bought it at 18 and you added at 19, you sell some at 20.50, which we did. Got smaller. Then it came in, bought a little bit back, above 21. I'm like, up, selling some above 21. I'm down to a third. And then today on that last third, I took a loss. But I made on 2/3. Why? Because it broke 18.50. So if you bought correctly here and added here, sold some, stuck around because it still looked okay. Now, below the moving averages. They've took some FOMO out. Let me be careful. So I hold on a second. Let's see what. So anyway, so that's that. So it broke below this. I'm out. Changed. Here it was tight, looking good. Got above the moving averages. Bought it. Added. Sold some. Added. Sold some. Stayed around to see if it could stay in the game and constructive, and then broke. So that's how I view the world. Tesla also. Listen, I was very long Tesla on Friday. It broke above what? 798, went to the 820s. Yesterday was a pain in the ass. We came in, it was down 28 points. I'm like, you know what, let's not freak out. It should hold 780 if it's any good. If it's not going to hold 780, we have to get out and take a loss. It's like getting an 11 versus 6 in blackjack. Any of you guys play blackjack? Okay, first of all, I hate gambling, and I hate comparing gambling to, to trading. But, on an 11 versus 6, what do? Think. You double down, okay? Because usually you get a face card. You get a face card, and the dealer might have a 10 underneath and bust, so you get a face card. 21's a good hand, or if he has a 6 and a 10, he could, bust. You have two ways to win. So on Friday, when Tesla broke above 798 and held in firm, it looked good. I took some home. So yesterday, I said, let's buy it versus 780. Give us a reactionary low at 785. 785 held, bought more, had it overnight again. And then today, added pre-market through 724. For those of you who tune into my morning call videos, I said I'm going to add through 724. I added, took off some above 830 and change, and went to 840, traded around it, and then, Tesla changed again. Why did it change? It's not it's like the end of the world, but it pushed above 824 and couldn't hold it. With the market coming in the way it is with all this stuff, I said, hey, you know what? I'm going to get out of it. I'll sit in my call spread, even though it's probably going to reduce or lose premium. But this is when it was tight, and I bought it on Friday. This is your buyback versus 785 because it held well. Here you had a little bit of follow through to make a little extra and trim some. And then when it came in at the end of the day, I'm like, you know what? I'm trading. I'm going to hold special in a market. Hold Tesla in a market like that. It's going to be special. How is it going to be special to me? It's going to hold. It's going to hold 824. Did it hold 824? No. So that was my out. I kept a portion of the call spread on. Some guys will say, hey, you know what? I don't trade like you do, Red Dog. I only trade once a week or once every 2 weeks, which is fine. So if that's you, maybe you didn't sell it today because sometimes a red bar doesn't mean much. Here you had a big move. Red bar just meant it was going to digest. So we'll see if it does it digest again. For me, I'm active. I could buy it back tomorrow if it tests this area. but I don't need to be in it if the market might be under pressure after today's bearish engulfing day. So that's why you don't see Tesla on the VTF. You'll see it in the morning. But I want to update that because we spoke about that on the morning call recap, or the morning call video at 6:30. So with that said, again, tonight you're going to hear, why did the market sell off? What did the market see today that it didn't see the last few days? I don't think there was one reason. Obviously, the narrative is, the reopen to normalization, and the reopen to normalization is the same it was a few days ago, but now, since the market's rolled over, now they're going to say, oh, well, now South Korea had a quarantine because they had some spikes in cases. Russia is still spiking. Here it's going slower than planned. So now they'll create a narrative on why finally the market ran out of steam, where for 200 handles, every single person out there is saying, why does the market keep going up? Why does it keep going up? The economy is horrendous. The unemployment rate is probably going to go to 20% before it goes back below 10% because it was at 14%. So now this, it kind of makes sense. So finally the market told you it's done ignoring the bad news and, take some caution, maybe get a little bit more net short than you've been, and switch some gears and let the market do discovery, but you do it in a way where you have a less risk on, where you could handle and embrace the volatility. So I wanted to do this public video for you guys because I did see a lot of red dog reversal sells, a lot of bearish engulfing days. What I call that is a day to take notice. What's really important about a day to take notice is the day or two after, to make sure it doesn't become just a misdirection move. If you adjust on the day to take notice and we have continuation to the downside, it doesn't matter because you're in good shape because you reduced a lot of your longs higher, so you could test things lower, or maybe you got short finally because today was your first signal that the market, might retrace a bit. And with that said, it's 4:34. I'm sure everyone's tired. You want to look at some of the weaker sectors? Well, look what like Bank of America did today. Look at Bank of America. Bank of America didn't even get back to 2481 and broke below this before the market. So banks are making lows. It was hard for the Qs to do it by itself. Let's see what the IWM did. IWM broke below 129.19, made a lower high. Also, when you look at relative weakness, how do you see relative weakness? Well, the SPYs made it all the way back towards the high from April 20th. The IWM did not. Here's April 20th, and here's a lower high. So that is the first thing that broke down, and that gave some clues. Same thing with Bank of America. Bank of America couldn't even get back up to where it was here, let alone all the way up here, so the banks could be a problem. Back in the financial crisis, I remembered every reflex rally we did, I was able to see where the relative weakness was, because you get these oversold bear market bounces, and then some things wouldn't rally, and then the first time we go back lower, the ones that have relative weakness, they go down first. So we'll see what kind of downside do we get in the small caps, in the banks, in the airlines. What did the Jets do today? Jets is on the verge of breaking below here. If the Jets breaks below 13.13, then you have 11.95 and 11.25. Jets lag and should be avoided, which is what I've been saying. Now we'll see, does this break below here to head back down? If it does, this will be noticed. Boeing also isn't special whatsoever. You have this lower wedge, hasn't rallied. Look at this lower move. You had a bit of a asymmetrical bear flag that if it breaks below this, this will pressure the market. So some of the weaker sectors, if we pull in, they look like they're going to get some downside follow through. And some of the extended sectors like tech, like I showed you with Apple, are far away from the 8-day, which could at least pull back to that. They can even pull back to the 21-day and still be fine. So some people ask me, how could they be a member of, hold on. Let's go here. Where is it? Hold on. In Redler All Access. Well, t3live.com/RAA. Okay, that is my service. I'm not here to promote my service, but I think some of you guys need it. I'm not going to toot my own horn, but I'll give a little toot that April is probably one of my best months in my career, and the first quarter was my best month. My best quarter, I think, of my career. And I'm doing this for 22 years. So if you had a lot of problems with the volatility in the first quarter, had a horrible April, and even if you had a horrible fourth quarter, listen, guys, we've had two different types of markets in the last 7 months. In the fourth quarter of 2019, we were trending above the 8-21 day. We were in a portfolio approach, 20 names. Everyone's moving, shaking, high-fiving. Things were making higher highs. It was a low volatility, great market. That was a great quarter. A lot of people on the VTF and Redler All Access was like, wow, we held so many names, okay? And if you want to go back, okay, to see what that looks like, if you remember, that was this. Remember this trend? This is a beautiful trend. The trend that broke above right here, stayed above it pretty much for a whole quarter. We were in portfolio approach until finally right here. Remember, I was in Miami for spring break with Chase and Selena. I'm on the beach with my towel. Everyone's like, "You look a little tired. You must have been out last night." I'm like, "Well, I went out, I had my run, but anyway, I got stopped out of my momentum longs. Remember, I think that was Amazon at like 21.25. It was Netflix, whatever it was. I'm like, take some caution, guys. And then that was here, and then that got confirmed by breaking here before that. So if this was a great quarter for you, then you had your volatility quarter, which also was a great quarter. If you didn't make money during this quarter when things were slow and methodical and you could have been a lot of longs, or if you didn't make a lot of money during this down, you move with VIX through the roof, playing ranges, H cell setups, red dog reversals, selling premium, or if you didn't make money on this, this rally back, you need a lot of help. Probably need more help than me. I can't help you. If you didn't make those money in the 7 months, I don't know. Maybe you don't have enough capital. Maybe you don't have the right process. Maybe you're not doing the right routine. And even if you did pretty well, okay, because I've done pretty well in my career, and feel like you need a community that is on top of it. We have like 400 guys with different skill sets that are sharing information and their expertise. Then you should go and join. Okay, at least try it for a month. What the hell's a month? And I even told a bunch of you guys back in a few months ago, if you really I can't even say it, management get pissed off at me. If you really can't afford it, and you emailed me, I'll do something to try and get you at least a trial. But if you lie about it, the trading gods will get you. So anyway, in conclusion, we'll see, does this day start a new trend? The same way you had a big gap up, a new active sequence, it started a new trend. Same way, I guess, it didn't really happen here. This was not even that potent. It just kind of limped below the moving averages before the gap down, before taking out 32.14. This day could mean something or not. And if it doesn't, if tomorrow we have no downside follow through, or we open up and things hang around, then you'll see me put on some positions as they prove that they're worthy of being put on. And if you said, "Hey, Red Dog, I sold my what's it called, my cash account with you," so let's switch gears to more of the longer term intermediate cap. So on this day, okay, right here is where I sold my wife's cash account. Okay, I talked about I have 7 accounts. I have an active account, a swing account, an options account, and a box account. Those are my professional trading accounts I trade for a living. Then I have 3 other accounts. One's a 401k that I put money in every single month. Kept doing that. I'm going to do that forever because I have a job, I make good money, and if you have a job the same way and you can afford it, do it. If you can't afford it, I understand. There's, what is it? How many people out of work? 22 million people out of work. So if you can't put it in your 401k, that makes sense. You need to put food on the table, but hopefully trading helps that. So 529 again. I think down here I started to add 50% more monthly, and I added a lump sum. So that was that. The intermediate cash account, where everyone on TV wants to talk about how smart they are because they're putting money to work, or they have this amount of cash. You hear about it all the time. I tried to give you something to base yours off of. I think I started right around this day. Because my wife was working at UMD&J and she went into private practice. So her retirement account that was built is actually built from 2004 to 2012, and her average cost during the financial crisis made her a lot of money. The same thing that could happen here over multiple years if you get a good average cost. But anyway, when she left, that account could not be added to, so it could only flap in the wind of the market. So I had it in cash at some point in 2017-18. So I'm like, let me put this to work because we're having our first real correction. So I think my average into this 21.91 low was somewhere 27% off the highs. So right here, I took it off, I believe, on this day. No, not 28.79, it was this day. So you also have to sell it on the day that it closes on the highs, because that's when they get the closing print for whatever funds they're in. So anyway, that's in cash. If you want to play this game again with me, I am not looking to put any of that money to work, probably if we see here. And we might not even see there. But if we see there, maybe I'll start. But I really feel like, if this is going to lead to some kind of corrective phase, I want to start a little bit lower. But again, it doesn't say this has to happen. I'm just telling you what I'm thinking about and how I'm planning my thought process. So if this day leads to some kind of corrective phase, I'm not starting here. I'm going to start probably maybe at 2,700-ish, which still isn't, it's 250 handles off the highs. Or somewhere in this zone, I might do my first 25%, and we'll see how life is then. But for today, on an active basis, I am a lot more neutral, and we'll see how it goes from here, and just continue to be prepared, and you can handle any market in front of you. If you have a strong process, you can handle any market in front of you. If you have a solid routine that you love, you could do it every day to handle the market in front of you. And if you want a community and a team, and you want to have me as your offensive coordinator, coach, and also player on the field, well, then write this down and click it and join for at least a month. I wish you guys the best. Have a good night. I'll see you at 6:30 tomorrow. I'm Redler All Access. I'll see you much more than that.